on the financials, Carter. What do you see in these?
Well, I would say the word stretch comes to mind, but let's see if we can look at some charts and try to figure it out together. For what it's worth, on the fundamental side, both these stocks are trading right now below or higher than the 12-month price target on the street. So the street actually thinks collectively that they're worth less in 12 months than they are now. But you see here how far Goldman is trading above its 150-day moving average since the October low. And then look at the long-term chart. And this is important. Goldman is up against an important internal trend line. It has hit its head each time when it has rallied to this level. And so my thinking is, if you're long, take some profits or sell some calls. With new money, I'd rather be short than long. And the setup for American Express is nearly identical. If you look here, too, this is a very steep, uncorrected move in American Express, far above its 150-day moving average, more than double the performance of the S&P since the October low. And it, too, on the longer-term chart, is up against its internal trend line to the penny. Both of these are full, as the expression goes.
Mike, do you think that they are full as well?
Well, I mean, that's, I guess, a technical question, and you already asked the right person on that one. As far as the fundamentals go, I mean, American Express is growing their bottom line at better than 14%. So their earnings growth is double that of the S&P, and yet it trades at a discount to it. And, you know, unlike Goldman Sachs, which would probably be more of a cyclical story, you know, they're part of the oligopoly in the payment space. You know, so you're talking about MasterCard, you're talking about Visa, and to, you know, a lesser extent, you're talking about American Express. But there's only a handful of companies that really operate in the space. And of them, on a fundamental basis, American Express is arguably the cheapest one, and it is seeing reasonable growth. But I do agree that a lot of these things have had a heck of a run, and I don't know that I would chase them right here.
When you look at American Express and you compare it to Visa and MasterCard, to pick up where Mike left off, American Express has outperformed Visa and MasterCard by more than 5 to 1. So the way I look at these is through the prism. You have to have a thesis in the market. You have to understand whether you think the market's going up or going down, and that's top-down approach. And if I think that the market is going to correct in a month, month and a half, then a lot of these are going to come back in.
All right.